We're going to do our best to do the non-Middle East thing, and we're going to start on time-ish, with the idea that we've got people that are going to be joining us throughout the region at live.nextmoneydxb.com. So I believe, thanks to OVN in the back, that we are already live and streaming on YouTube. So welcome to everybody that's out there. We'll spend a lot more time trying to grow our regional audience. But thanks so much, everyone, for coming to the Next Money event today on Challenger Banking. My name's Aaron Oliver. I'm the chapter or the lead for Next Money in Middle East and North Africa. We're a community of FinTech enthusiasts, shall we say, or practitioners, bankers, investors, UI designers that are looking to push financial services from the plastic card into the digital future. I say that as a MasterCard employee. It's funny how I do things in my life, and I'm the head of digital commerce at MasterCard, and we still talk about cards. So everything that I do in my job is about not having a card, and all they talk about is cards. It kills me. Thanks so much for coming. I hope that all of you have registered. That helps us remind you of our upcoming events. So if you go to nextmoneydxb.com, you can register your interest. We don't give that list to anyone. That's there solely for us to let you know what's happening and when we're going to be getting together and keeping everybody informed of the latest that we're up to. So that is for you. So please go and register there. The other thing is this is very difficult to do without our sponsors and partners. So we're really happy that Emirates NBD is again sponsoring us for this event, and really their interest is to bring this community together to further not just their aims but the community in general. Thanks to OVN again for the streaming. Thanks to Dubai Future Accelerators for the space. And we've got a new partner that we're going to be working with here in May, ArabNet. So Omar has been kind enough, the CEO of ArabNet, to come and join us. But we're going to be the knowledge partner for the banking innovation track at ArabNet. So everyone here, I'm sure, is very familiar with ArabNet and what ArabNet does. What they're going to do, they had their first banking innovation track, shall we say, in Lebanon about a month and a half ago that I was lucky enough to attend. And that's going to be something that is going to be consistent now at each of their events throughout the region. And we're going to partner with them to make sure that this group is represented, that the content and the quality is really there, and it's a place that we want to all come together and share our views and learn from one another. So we'll be giving away a couple of tickets to some lucky individuals that have come tonight. So thanks for attending in person. But that'll be on May 16th here in Dubai, and I'm really looking forward to being a part of that. But let's get to the event at hand. Sara Grinstead is one of our Next Money members, and she's going to be handling a panel today on Challenger Banking. So everyone, please, round of applause. Thanks. Hand over to Sara.
Hi, and thanks, everybody. Is my microphone working? Yeah, perfect. Okay, so just to sort of set out a little bit of the scene of what we're doing here, Challenger banks have been arriving in the market for about the last decade. So if we go back to 2007, we see the likes of Fidor starting out in Germany. Those banks have got something in common with each other. So what we see across them all is that they are typically digital first. They're doing away with the traditional branch networks. They're doing away with a lot of the traditional processes, the paper, the physical outlets. They are typically incredibly customer-centric, and their models aim to better way to deliver a much better customer experience and actually better products, better pricing, better transparency and education to people. They're leveraging new technology to help them do that. So when we talk about digital and fintech in these challenger banks, what they're doing is they're taking new platforms and new solutions like blockchain, cloud technology. They're often using software as a service rather than building it all themselves to kind of deliver these solutions to people in a much better way. and they're massively underpinned by data analytics and data science. So they're actually joining the dots in the data about the consumers to give you much more information about how to experience that bank and how you can get more from your money. I say it's been going on for a decade around the rest of the world and on a global level. It's only really been in the last few months that we've started to see that model start to be adopted in this region and start to progress in this region. And we've got a panel of people with us here today who are at the forefront of driving that in this region. So I'd like to invite to join me on the stage Katharine Budd, James Greenwood and Jayesh Patel, who we're going to kind of run a bit of a panel session and a Q&A with them over the next sort of maybe half an hour, 40 minutes, at which point we'll hand over to you guys to ask them all of the questions that you've been dying to ask as well. So do you want to join me on stage and I'll let you guys introduce yourselves? So Kat, do you want to give a bit of an intro about yourself and about Now Money?
Sure. Can you all hear me? Hi. I'm Katharine Budd, and I'm the co-founder and CEO of Now Money. We are a financial inclusion challenger bank, so we're very much focused on the 70% of the UAE working population who cannot access traditional banking.
James Greenwood, the CTO at Clearly. Clearly is going to launch a new bank in the UAE, but do it on a neobank model. So working with partner institutions, not just from the FinTech side, as Sara was talking about, but also partnering for some of the core banking pieces with an institution with a license and a balance sheet, allowing us to focus more on those bits that differentiate.
Jayesh Patel, I head up Live Bank, which is a new startup. It's a lifestyle bank by Emerson, which is focused on millennials.
Brilliant. So I'm going to move on to the questions. And I think, Kat, I just referenced that we're only just seeing the emergence of the new banking model, the challenger banking model in the UAE now. What is it about the UAE, the situation and where we're at here right now that makes it a really good time for challenger banks to be moving in and thinking about this space?
So I think this is not just specific to the UAE, it's really representative of the Gulf. We're an incredibly tech-hungry area of the world. Saudi Arabia is YouTube's biggest consumer by a long way. And I think the demand for technology has been here for quite a long time. For a while it has been the privilege of those who could afford it, but over the last couple of years the price of smartphones has come down so considerably that you can now buy a smartphone from Carrefour for about 100 dirhams. So suddenly we're in a position where everybody, even the person on the lowest income, can afford to be online and on mobile. So I think that has really made it accessible to the masses, not just the privilege of a few.
And James, do you have a...
Yeah, so I think it's not just a good time in the UAE, I think it's a good time globally. So I think it's the coming together of worldwide customer adoption. This means it's applicable in every market. I think actually the progression in the technologies that can support this, so people going from having more B2C models to the B2B2C to enable this, allows people to build more of these propositions without having to own it all end to end. So being able to focus on something that's going to add value, going to deliver value back to them, going to be profitable, without having to take on necessarily all of the other pieces that historically would cause challenges.
And Jayesh, your model is slightly different in that you're building a challenger bank within an existing brand. So what is it that makes it a good time for you to start to tackle it in that way?
So, I started with Emirates NBD about 5 years ago. And I still remember the time when we were going out to get customers and tell them, you can use mobile banking and don't worry, your money is safe. Yeah. And I think to me, one of the drivers of the change is the past 4 or 5 years where a lot of banks have invested in educating the customers. We had extremely low mobile penetration then. Now it's increased. And now these customers are willing to try new stuff. For us, the driver of the change, to be honest, is our customer behavior. I have the advantage of seeing how 1 million customers behave across different age groups. And when you start looking at their customer behaviors, I think for us, millennials want something different. I think lifestyle in the UAE is extremely important. And we felt with the existing banking model and the brand, it was a challenge to deliver this. So we wanted to move from, if you can think of moving from your dad, banking with your dad, to moving to banking with your bro, which we thought would be a place where you can start working with customers. So to me, the heavy investment in getting people to be comfortable with the security of mobile is one of the biggest drive. I think smartphone penetration and the rest, yes, it's a big plus. But I've been in discussions where we've said, okay, we're going to get people to stand in front of branches and tell them, hey, you know what, mobile's safe, please download. Yeah, it's okay. So I think we've gone through that pain, a lot of institutions have, and now there is confidence, or there is a large segment of customers who are okay with doing this business. And to me, I think that's one of the drivers of why now and maybe not 2-3 years ago, like the other markets. Yeah.
Okay, and I guess, James, I'll let you talk a little bit about what you did before you joined Clearly, but we mentioned that other markets have been doing this for quite a while. It's only really just coming here, so there's an opportunity for challengers in this market to really learn and leverage the experiences that we've seen in Europe and the States. What are the key things that you would take away from those experiences and say that we need to get right here?
Sure. So Sarah knows my last job before I was here was spending 3 years building another new bank. It's so much fun I'm doing it a second time over in the UK, and taking that from absolute start through to market launch. So I think I've harped on about the technology bit already. I think that you can do the other two bits to go with that. So the process piece, everyone always talks about, hey, you're going to launch a new bank, we're going to fix all the processes that are already there. It's going to be so much easier to onboard and to do all this. And that's great, but it's also incredibly difficult to fix all of it at once. So I think it's a really important piece around starting small, both in terms of the target market, in terms of the proposition, and in terms of your expectations of where you're going to get to, and then just relentlessly iterating on that and finding ways to expand it to more people, to add more capabilities, and to improve what it is you're delivering. So I think that's really important. I think the people side of it's also hugely important. In a traditional bank, you've got an awful lot of people. In a startup, you can get to an awful lot of people, but even hiring takes time and costs money and takes you away from what you're trying to deliver. So I think it's really important to make sure that the core people doing it are the right people to get you that velocity and that focus, because that's what sets you on track. Otherwise, you just get the same entropy. You get another bank that slows you down.
Okay, and I guess if we think about, you sort of mentioned, think about that one thing and do it really well. What are the propositions that perhaps you've seen in other markets work really well along those lines, and maybe some of the ones that perhaps haven't landed and have gone away quickly?
I think it's really interesting, because I think if you look at how people are trying to achieve their success, they come up with really different things around it. So you can launch a challenger bank that has quite a similar proposition but solves a really particular problem. So somebody who wants to raise a liability-led strategy, do digital savings accounts, and it started with the ING Direct, it's continued, and that model still works. Atom's done something quite similar since the BBVA piece. You can then look at other startup banks and challenger banks who've just gone a completely different approach. Mondo is a great example where it was, rather than try and be the full bank to begin with, it's actually let's get people bought in, let's demonstrate where it's going to go, let's get the advocacy right, rather than necessarily trying to replace someone's account to begin with. So I think that's a model. I think then there's a third model that is more prevalent in the FinTech, more prevalent around equities trading, FX and so on, around just trying to have a revenue based model to actually generate the revenues and the income and then build the growth out of that.
And Kat, your model is probably the most different to the banks in Europe that have gone. So a lot of the banks in Europe are looking to bank the mass market. So are the relevant learnings for you guys, or are you on a completely different journey?
So definitely there's learnings for us in terms of customer acquisition, how to look after people. I think the majority of people want a simple and a nice to use mobile banking app. It's not that much different really for one market to another. I think for us the monetization is critical though. We're looking at a target market that traditional banks have not been able to monetize. Traditional banking model is based on lending. Our target market, the low income group in the UAE, are very focused on remittance. So that is a very obvious and very reliable pattern that we can use to monetize quite effectively.
And monetization is an interesting point. So actually, if we look at the journey of a lot of the challenges that have emerged in Europe, we've seen a pattern of them ending up being acquired by larger banks. We've seen a pattern of some of them actually disappearing and selling off different parts of it. What are the things that we need to think about here to make sure that we actually build sustainable and long-term business models that will be successful? James, do you want to?
Sure. I think the challenge is both the same for challenger banks and for traditional banks, in that if you're subscale, it's just fundamentally difficult to get to an equitable position for yourself. You have to either keep the business, in fact, both have to keep the business small enough to be manageable and that it can feed itself, but also have the proposition that's going to drive the revenues or the success one way or another. I think going and trying to be all things to all people too early is just a way of guaranteeing that you need too many people to deliver too little value for too long. And I think that lesson has been learned by most banks who tried going out there and tried thinking they would change everything all at once, and then have retrenched quite a bit to go, let's narrow the proposition somewhat, let's focus it more, and let's build towards that.
And Jayesh, I guess from your perspective, you're in the quite fortunate position that you're part of a large organisation, so monetisation is perhaps a different challenge for you. What are the pressures that you have to monetise live quickly versus actually build that proposition out and take some time investing in building it?
Yeah, so one of the advantages I have is I have a very generous executive team, and my KPIs are not.
Are they in the audience? Is that it?
No, they aren't. I hope anyone's watching. Yeah, they're taking notes. Yeah, I've got the spies. We have a very generous executive team, and the notion when we went out was, look, we have solid businesses that make money. I don't think the intent was let's launch something and quickly start making money on it. No, it was really to say we're going to do something new. Let's figure out how to do things differently, yeah? And then let's see how it grows and how it succeeds. One of the things my boss always tells me is be different from your existing organization. So luckily, so far, no monetization targets. Focus is on customer experience, the rate of innovation. I think in trying out new models, for example, how can you reduce some of your OpEx by just trying different things? How can you cut out some pain points that customers have by integrating across partners? Yep. It's truly an experimental platform. And as we go, I'm sure the revenue targets will come. But the first idea is, look, if we want to do something different, let's figure out the space. Look, there's tons of banks doing this. I don't think anyone's cracked it. I don't think we've cracked it. We are going to try. We're going to give it a shot. We're going to try different elements of it. And as customers work with us and engage with us, we'll keep on refining this to a point where we can start saying, yes, now we can start monetizing some of the elements. I think one of the challenges that I've been given is, look, if you look at banks around the world, they have the same monetization scheme. Yeah, you've got fees and you've got interest income. Yeah, the reality is, you know what, there are other models you can look at. And you will start seeing once we start launching over the next year or over the next year and a half, you'll start seeing different ways of us monetizing our proposition. Why should the customer only pay? Yeah? Are there other stakeholders who are willing to pay? And that substitutes the fees that the customer pays. Yeah? So for us, the monetization strategy is one where we are being asked to explore, forget the traditional model, look at all the options you have and give it a shot. Yeah? So luckily this year, no monetization pressure for Bay.
Quite a nice place to be, and I'm sure the other panelists are a little bit envious.
It's a little green right now.
After this, they might just decide to give me
One of the things you mentioned then was the feedback that you'll get from your customers and your customers working with you on the journey to help understand what those pain points are, to help you understand if you're getting it right and where you're going. I guess that's quite, I don't know why we're losing light, maybe. I guess that it's quite difficult. Easier for you guys, you've got an existing customer base to engage those customers. Harder for you guys trying to build a customer base to get that voice of customer into your business model. How are you engaging those customers? What sort of questions are you asking them? What are you looking for from them?
So, you know, our journey, to be honest, started 2 years ago. Yeah, we started looking at our younger customers and saying, look, there is a trend where obviously, I think 2 years ago, millennials became a buzzword. And we said, you know what, we need to start figuring out how we approach this target segment in this region. Obviously, if you look at the demographics, it's an extremely attractive segment to go after. So we've been working, we worked with some of the most best-known FinTech disruptors in banking. We've done tons of studies. We've got studies with some of our partner research firms in the UAE, Egypt, KSA. We've had focus groups. I mean, for 2 years, we spend a lot of time bringing people in and trying to see what they want. Now, on the flip side, one of our biggest advantages is we have a wealth of data. And so we use this data to try to see what they are doing and how their behavior is changing. Yeah? And we brought the two together to try to come up with what we believe is a roadmap of what the customers want. So for us, it's been a long journey. It's been a long journey, and I'm assuming this is just the start.
Yeah. And Kat, I guess for you, where you're trying to build a proposition for customers where you don't have that data and you don't have that engagement, how have you gone about getting that customer input to your journey?
So I'm a big believer in getting an MVP out early. So the Monzo model, which is definitely get your product out into the hands of real users as soon as you possibly can, in whatever guise that might be. So we did that pretty early on, and we had a pretty fantastic test group. We then started signing clients and onboarding some of their employees and letting them test it, and they give us feedback in 3 weekly sprints. So we do have that data. It's real, and we're lucky that our target audience have a very close correlation in terms of their behavior. So they tend to earn a similar amount and behave in a similar way. So that's been very impactful for us, whereas obviously, understandably, in a more diverse market like a wealthy population, it's much more difficult to predict customer behavior.
Yeah. And James, are you finding that a challenge with Clearly?
I think it's a challenge to one extent or another for everyone, but it's just different challenges around it. So I think for us, if we were to go, hey guys, we've got a current account and a savings and a loan and a credit card and wealth management, and it's great, and you can migrate everything onto it all at once, do you want it? Half of them would go, that sounds great, and the other half would run for their lives, because do you really want to put all those eggs in the basket of someone you've never dealt with before? I think a lot of it for us has to be around how you build the right engagement over time. So not just how do you get someone involved and knowing about you and being interested, but how do you understand where their fears are with their money as well as their needs with it. So getting someone to test out a credit card is a lot easier than getting someone to test out a current account. One of them, if money doesn't go into your account, your rent doesn't get paid, you have all sorts of problems. The other one, if it goes horribly wrong, you might get lucky and not have to pay the bank back. I know which I'd rather take a risk as a customer and not as a bank. So I think there's lots of opportunities there to build that relationship over time. And if you sequence those things in the right order, you can use the previous ones to give you the right learnings for the ones that come after them.
Okay. I've, like James, only been in the market for sort of 6 or 7 months. I was working with James on the bank that we built in the UK. But one of the things that I've heard a lot in this market is that we're massively overbanked. There's too many banks already. We're seeing a spate of consolidation, be that forced or otherwise. We're looking at launching new banks, and I think there's a valid question of, is the space for those banks in the market, and do we really need those banks? And Jayesh, it'd be interesting to understand what made EMBD decide to go down the route of launching a new bank right now.
Yeah, I mean, look, I agree. I think we're massively overbanked. I think the consolidation spree is more of an OPEX play. You don't need big backends run by multiple banks to serve the same set of customers. Yeah, so I think there's plenty of room to consolidate on that. Yeah. Now on the front end side, I believe there's opportunity to brand differently and go after customers with different propositions. I think like Bank Clearly is trying. Yeah, you have plenty of opportunity to create niche segments, yeah, and move away from the massive segments that we traditionally focused on and start narrowing down and going after the specific customers. Yeah, so for me, consolidation is purely OPEX related. Shrink the cost down so you can serve your customers better at lower fees or increase profits. And then on the front end, I think there's plenty of opportunity, yeah, to create different models of acquisition. Yeah.
And I guess, Kat, from your perspective, you're in a bit of a niche, so you have an opportunity to do something different. How important do you think it is to have identified that niche and actually have a market to go after?
Yeah, it's interesting to refer to it as a niche because it is
It's a huge population.
70 to 80% of the population here. So it's not that much of a niche. Those 50 banks that we've got in the region here are chasing after 20% of the customers. So for us, it really is a captive audience, and I think one which makes the Middle East much more suitable for challenger banking, because it means we're not trying to persuade people to leave their existing entrenched relationship with a bank. We are giving them something that they should have probably had access to a long time ago. And it's, you know, banking, we forget how easy it is to go online, pay our bills, not have to drive to a service center to pay something every month, not have to queue up at an exchange house to send money home. And that's most of the people here. So it's not that much of a niche, whereas in Western markets, challenger banks are really trying to just do something different to the existing players and persuade them all to leave them, which is not an easy job. It's expensive.
it's not an easy job, and I guess, James, from the sort of three models we have here, it's probably the one that you guys are going to have to tackle the most. How do you intend to actually go about convincing people who've got banking relationships that they've potentially had for a number of years to actually move, to try something new, to test a new brand in the market?
I think there's a couple of parts. I think the first thing is, it's not necessarily about there being too many banks in the market. There's too many banking problems that still haven't been solved, regardless of how many banks there are in the market. I think that needs addressing, and I think that's part of where you start to focus with customers and go, look, despite how many relationships you may have, how deep they may be, and with how many well-known institutions, you still haven't got over how you deal with sending money in and out of the country without having to go down to UAE exchange or find someone else. It's like, how is that still a problem? Yeah. I think the other thing is how, for a neobank, how they position themselves is really important. So how much do you leverage your own brand and what you stand for? That clearly has to be, excuse the pun, front and center. I hate doing that. I think also though you have to make sure everyone's really aware of who it is you're partnering with and what they stand for and the values they're bringing to it and the stability they've brought to it for a number of years before you.
And you sort of referred to partnering there, so partnering from a bank perspective for you guys, but generally across the board, I think you're all looking to partner with fintechs, with different financial institutions here. What's the importance of the partnership model, and how difficult is it in this market to get that right? I don't know if, Kat, you've perhaps had quite a lot of experience of this over the last sort of couple of years.
Yeah, absolutely. And I think there are a few things here that are quite prohibitive to fintechs entering the market. We're obviously part of quite a fragmented regulatory system. We've got several regulating authorities here, and I would say the ones that are most warm to fintech, unfortunately, can't regulate retail. So that rules out quite a lot of businesses wanting to start here, and it can be quite an expensive and time-consuming process to go through the necessary paperwork to license onshore, which we did. So there are a few things that are prohibitive, and the other one is getting partnerships in place with corporates. I certainly wouldn't say here that banks are negative towards fintech. If anything, I would say banks here are very positive, and they definitely want to hear about it and are nearly always interested to hear from us. Saying that, banks are absolutely vast organizations, and often when they're trying to get involved with something new, you find many people are involved, even in meeting one, and then there's suddenly 15 or 20 people, and very soon it becomes quite difficult to align 20 people's diaries, and project slows down and maybe even collapses. So I would say that there's not really any negativity towards fintechs from banks in the region, but just the size of them can make it quite difficult for them to be nimble enough for fintechs, and time here is really what you need to be able to get that to run.
And I guess, Jayesh, that might be something that you come across every day within EMBD. How are you working to actually get the fintechs to be agile, to deliver quickly?
Yeah, so we have people like Nimesh to help us to make sure we get all the best fintechs. No, well, I think one of the advantages that we have is, look, a lot of the fintechs, either local or global, who have interest in the market, approach us. Yeah? So I think it's a huge advantage in that we don't have to go out necessarily always looking. Yeah? So that's an advantage. So we partner. I think I've got 7 or 8 fintechs we are partnering with right now in the process. Now, the way we get away from the meeting, and then the first 15 becomes 20, and then 50, and then 100, and then it just halts. Yeah,
Sorry.
It's very true. Is at least the model we are taking is we are incubated by Emirates NBD. We have a small team, tech team, and our business team sit together, work together. We get money. We go as a team collectively and choose what we want to do. We partner with the firms we want to. We integrate with them. I think our executive team is extremely supportive of us trying new things out. So it takes away some of the challenges, yeah, trying to bring this person and then convincing this. So we are much more nimble within the organization. And I think that's the advantage. I honestly don't see it being successful unless something like that is done. Because I can tell you, it'll take years, yeah, to get an RFP done. By the time you partner with the fintech, guess what? There's 10 better things out there, yeah. And for the fintech also, they can't spend too much time on one company trying to close that one deal. It's too expensive for them to keep on running for a year without signing a deal. So I think for us, that model seems to be working well for us and our fintech partners. Yeah.
Fantastic. I think you kind of both referred to a few of the challenges that there are for banks, but also fintechs trying to set out in this region. I don't know, James, if you want to give a bit of your perspective around maybe what you've found in the last few months since you've been here that actually makes it quite challenging for new banks and new models to launch.
Yeah, I could do that. I think I'm going to start with a sales pitch, though. Actually. Sorry. I've got the audience now. So I agree wholeheartedly with both sides of that. And I think that's actually one of the reasons we're approaching this the way that we are, is that actually by being one of those companies that can then form the relationship with multiple of those fintechs, we can solve some of those challenges by being nimble, not having necessarily quite the levels of medieval governance that exist in some other institutions. And if we can build that quickly enough and get that right for ourselves, then it's only one relationship you need to form with a traditional bank to actually... Is that better?
Yeah.
Yeah, good.
Oh.
That, not so much. It's a good job on technology. So I think if we get that right and we get the integration right with those parties ourselves, then it's only one relationship for us to build with an additional financial institution and solve some of their problems with it. However, in terms of the challenges, I don't see the challenges so much as being what the regulations stop, it's what the regulations just don't say. So data as a whole is one great topic around it. So the rather a large lack of data protection regulation. It's not that it says what not to do, there just isn't anything there. Similarly, a lot around data centers, geographic location of data, availability of data for a credit bureau that's more than a nascent thing. I think there's just big challenges of what there isn't. And then just general regulatory challenges where things like EID needs more advancement and so on.
And Josh, I guess you possibly have a slightly different take on it. So your challenges will be much more about an incumbent bank and overcoming some of that to get to market. What are the things that you're finding keep you awake at night and scratching your head and figuring out?
What keeps me awake at night? There's so many. Yeah? You know, I got to say, when I started this about 1.5, 2 years ago, and I took the role up, I said, you know what, I read all the articles all of us read. Yeah, connect APIs, plug everything together, and sweet, you've got an awesome product rolling out. It doesn't work that way. Yep. You connect the APIs, half the time they don't work. Every partner in your ecosystem has to be as strong as you are, or you do go down. Yeah? And I think in the region, some of the local partners, even some of the global partners, you're just making that robustness. You're not just improving yourself, you're improving an ecosystem. Yeah? I think that makes it a real big challenge. So one is obviously building reliable solutions. You can build a brilliant front end. Yeah? But if you really want to alleviate customer pain and you want to integrate across platforms, you've got to make sure each one of them is robust. And that is time consuming, it takes money, and it's got to be a priority for everyone you partner with. Yeah? So I think that's one of the big issues, is making sure we create the robustness we need. Second is customer acquisition. Yeah? And I believe the customers in this market are very sticky. Yeah? And we've done customer service for 5 years. Yeah? I used to work for a telco, and you see a very similar trend. The appetite to switch here is extremely low. Yeah? And so customer acquisition is going to be a problem for all challenger banks. Yeah? It's not as easy going out and customers are waiting just to exit their existing banking relationships. Actually, all the data we've seen, it's going to be a lot of hard work. Yeah?
Okay, and we're going to come over to Q&A in a minute, so I just want to finish with one last question. We're really fortunate today, I think, to have 3 such different models in front of us. So we've got a traditional bank building a new business within itself. We've got a neobank, which is building a digital set of offerings that it will partner with a bank to provide. And we've got a very socially focused social inclusion bank. In terms of the models, what would be really useful to understand is how they're each going to succeed, what we can expect to see from you, and how that journey is going to play out amongst you all in terms of who's going to be successful, where those success points are actually going to come from.
Sure. So just to give you an idea of the outbound remittance market from the Gulf, we remit $100 billion every year out of the Gulf, which makes it the 2nd biggest remittance market in the world. There's 26 million people on a low income here, sending over half of that, 100 billion. So that's where we monetize, and we take a very small percentage on the remittances that they make, which are about 3 times cheaper than them doing it through a brick and mortar store.
Brilliant. James?
It's kind of hard to follow that one.
Facts and figures.
Math at 7 o'clock.
So, I think there's a couple of bits to this actually. So the first one is purely from our side. Then actually, if you look at what we're targeting, which is more around the affluent, the mass affluent, it is a smaller segment. But we're making it a smaller segment, yet it's a complicated one, but actually it means we're much more focused in the value we're trying to add there. So it's smaller segment, but it's actually over 50% of the profit pool within retail. So there is for sure meat there to go for. I think more importantly though than any one of these being a success is that actually it matters to the market and it matters to everyone that there are successes seen, and each of our success will actually resonate better for each other, in that if you're in a market where people don't believe that something new can arrive and can be successful and should be adopted, then that's bad for everyone. Anyone's failure will reflect badly on the other in this.
Jesh?
So obviously, I mean, to us, we know the retail consumer base. To me, my target market is very clear. It's millennials. Yeah? So I want the next generation of customers to bank with me. Obviously, acquiring the customers, getting satisfied customers, being able to see customers say, you know what, we are better off banking with Live than we are with other options. To me, is a driver of success. And when we achieve that, then we start scaling and trying to get more customers. But our first thing is to crack that. Yeah? How can we make it better for customers to bank with us? And again, we call ourselves a lifestyle bank, and you see the name Live. And there's a reason. Yeah, we have a lot of theory behind it. But the reality is there is a great opportunity for customers to live a better life, yeah, to fulfill more of what they want. And to be honest, if we do that right, banking is just going to happen. Yeah? So our objective is slightly different. We want them to live a better life. Money is extremely important for that. And then we believe the customers will stick with us, or will acquire customers. Yeah?
Brilliant. I am going to open the panel up now to all of the horrible questions that you can think of to ask them. Don't be kind to them. They really love to be challenged.
We'll pretend the mic doesn't work.
Yeah, absolutely. So does anybody
May
have a
not even
question that
pretend.
they'd like to ask? Can we get a microphone to this gentleman? Just over here. Sorry, Aaron. We thought we'd pick the opposite end of the room from you to make you run.
It's all right. Just a little bit of parkour.
Hello. I got a tweet this afternoon from the digital bank who's not here, saying the moment has arrived, and that's CBD now, saying that they've launched. Now it might be fake news. I'm not entirely sure, but we'll take it as hopefully it's true. Can you tell us when you guys anticipate launching, and what do you see as the key barriers to actually get into the mass market and launching your products and your organizations?
Kat, do you want to start?
So we're live. We are starting to roll out to, we're actually using a corporate model at the moment. So we give accounts to all the employees of a client who, for example, has a lot of low-income staff. People often think laborers. Yes, it's laborers. They're part of our market, but it's also retail, hospitality, cab drivers. So we started taking clients towards the end of last year, and we're rolling out to them now. So they're using our service.
Can you talk about how many customers you've got? Or
We've got about 5,000
5,000.
who we're just kind of staggering the rollout to at the moment, and then just more clients coming on board at the moment.
Brilliant. James?
Sure. So I've got a great get out of jail free card on this one, in that our bit's largely done. So in terms of what we need to build to get digital bank ready, there's a lot of that in place. Our timelines are now entirely dictated by how long it's going to take a partner bank to do they're fairly small but quite painful, because it's a traditional bank, parts of the process within that. So we're working through that piece.
So we had a discussion, and we said probably one of the first questions will be this.
Yeah.
Yep. So we're live on beta. We're getting select customers in, and I think we'll be in beta for a few. We'll see how long we are until we get the product right, and then we'll push it out open to all customers. Yep. But soon.
And I think to your point around is it fake news or not, James? I think you actually have a CBD card, don't you, to test out the competitors?
I'm a CBD now customer.
Yeah. Can share stories about that later over coffee. Do we have any more questions? Do you want to come in here?
Hi, thank you. So my question actually is to everybody, including existing banks. 2 days ago, Wonga got attacked. So we are hearing about security breaches across from the US here, retail, banking, payday loan service providers, everybody. What is Dubai and what are the banks here doing to protect its customers from such breaches, number one? And what sort of insurance are you going to take? And how will that affect your models?
James, do you want to take that one first?
Well, I love data.
I know
right?
you love data and
So
security.
it's one of the
right?
exact reasons why I mentioned data before, in that the lack of regulation, the lack of clarity on some of this stuff is worse than having something too draconian in this, because it means you can't have a common standard, a common bar that everyone's working to, and without that commonality, you create gaps where there are lacks of defences or easy targets and so on around that. So I think it's something where there needs to be a lot more collaboration around that. That said, I think it's difficult in a large institution when you do start exposing, no offense, things wider digitally, because you've then got to mop up some of the challenges you've had elsewhere. Otherwise, what you can now do somewhere via a new channel is a way of abusing something that could have happened in a branch, but there wasn't the access to do that before, and so on. So I think it's something that needs real concerted focus, not just in the new pieces, but holistically across everything.
Josh, do you want to take on his challenge?
Yeah, I have a slightly different perspective. Yeah. I'll tell you, look, one of the biggest advantage of being part of a big bank, yeah, is we've been dealing with this. Yeah, we have the best partners out there working with us, making sure our current customers who bank with us are secure. Yeah, and one of the biggest comforts I have is people in our tech team make sure that happens for us. We're not starting something new from a security perspective. We've got a robust, proven infrastructure of security. We've got the best partners. And to be honest, we've got the money to buy what it takes to make sure our customers are secure. Yeah. So to me, that is the biggest advantage I have. Yeah. And so for our customers, it's great. Yeah. We are live, yes, but guess what? We are powered and secured by the biggest retail bank in the country. Yeah? So for us, it's an advantage we see over some of our competitors. And to be honest, that makes me sleep easier that I'm using Emirates NBD security. Yeah? It's a big, like you said, I think it's a big issue today. And we're just glad to have the support of a big corporate on it.
Do you have a...
Yeah, so just to add to that, I mean, great spot about Wonga, but considering the time they've been going and the quality of customers they've been dealing with, I'm very surprised that there hasn't been a similar sort of situation until now. I think there is a lot of scrutiny on fintech and banks in the region, and with good reason. But if you look at something like e-commerce, the level of fraud and crime that actually exists in e-commerce is much higher than in fintechs and financial institutions. And actually in this region, it's very high as well. So people often think that because the level of crimes in the Gulf are low, that the same is applicable to online crime. Actually, no, we're in one of the highest areas of the world for online white-collar crime.
I think, just I'm going to add very quickly to what they said, I think the thing that's really important for any new bank to think about is not just the new type of attacks that you might get by being a new business model, but actually to make sure that you remember everything that's gone before, and make sure that actually when you get your IT security, your financial crime, your fraud people in your business, they're people who've worked in banks for a long time and they understand the traditional threats, and actually you shore up your business to what's new and what's coming at you, as well as everything that's gone before. I think a couple of the banks in Europe that have maybe struggled didn't learn that lesson, and I know sort of from talking to James that that's definitely one of the lessons that is being thought through and brought over.
I think there's a really important piece there, in that where we have seen a lot of these problems, they've not been super smart attacks. They've been super stupid mistakes in those companies.
Absolutely.
So it's been, the data hasn't been encrypted full stop. It has been emailed around. It's things that everyone knows not to do, but it was just a lack of basic controls rather than anything far more complicated.
I think my favorite example of that is the Bangladesh Central Bank heist, which was like 6 months ago, and it turned out they had no firewalls and they were using second-hand routers that they had purchased for $10.
From eBay.
Yeah.
From eBay.
Yeah.
Guard their central bank.
Hadn't reconfigured them.
Yep.
Brilliant.
We got one right here.
Hi, sorry, I've got the mic, so I get to ask the questions.
We'll send him that way next.
Sorry, I guess my question is more to Jayesh. You did mention that the fact that you have a existing backend infrastructure through Emirates NBD is an advantage in terms of optimizing your OpEx. Do you believe that the front end alone, a new front end alone, is enough to acquire customers and retain them as well? Or do you believe that as you move forward, you will need a parallel kind of a ecosystem of bros that exist at the back end that will help deliver a better product?
No, so I think it's a great question. Yeah, I think when we set out, we explored all the models. Yeah, buying a whole new back end. I think what we've done is a mixture of a middle and a front end. Yeah, and we've luckily had the choice of choosing what we think works well. Yeah, and using that, for example, our core banking, and then looking at other areas and saying, yeah, you know what, really don't want to use this. Let's go out and get something else. Yeah, even if the bank has it. Yeah, so that to me has given us an advantage. Now going forward, I mean, Emirates NBD announced they're spending 500 or 600 million dirhams over the next 3 years on technology. Yeah, and I get to ride that wave without paying the bill. So it's great. Yeah, they're looking at the newest stuff to optimize performance, to do what it takes so we can serve our customers better. I guess we are in a unique position with that we get to leverage some of that investment. Yeah.
As I walk to the other side for a question, I'm going to ask a question here. You're targeting the lower end segment.
Correct.
Security from a technology perspective is one thing. How are you addressing social engineering?
As in driving behavior change?
As in people sharing pins, I can't handle this, so I hand it to my friend, all my money's gone, what happened?
Absolutely, good question. So the low-income market here are notorious for sharing PINs and passwords, particularly because at the moment their only option for getting money off of their prepaid salary cards, which are a bit like a gift card that they get paid onto, is going to an ATM, which is often quite far away from the place that they live. So they'll give them to one person who goes and collects all the wages in one go and has all the PIN numbers written down in a nice notebook, which is obviously not that secure. So we didn't think that the current regulation of having PINs and passwords was enough, so we also have facial recognition built into our app.
Hi, before I ask my question, I think one comment you made earlier, that you might have that 500 million that Emirates NBD want to invest, but the issue with that, I see it is similar with the rest of the banks that you're seeing even in Europe. For example, you look at Deutsche Bank, they've got, I think, over $1 billion that they can invest, but will that address their issue? I think to be a challenging bank, you have to change the way that you're actually looking at how you are. When I listen to what you're saying, it's just like having a nice front end to your existing back end. I think that's what you said right now. How will that address the issues that we are currently facing with Emirates NBD if you are still using the same processes? But then my question is, and sorry for that.
You can have two questions.
Which for the panels. I want to ask the question, but
So
then just a comment on
I'd
that.
like to comment on
Answer
that.
that one first. and
I
then-
didn't say we are using the same processes, yeah? I said we are using the same core systems, yeah? I think we are not, one thing we are very clear, we are not digitizing processes, yeah? We are redefining the way things should be done. Now, I visited a bank, actually a startup, which decided not to use a proven core banking system, yeah? And they had a disaster. It didn't work. Yeah? It didn't work. They rolled it out. They spent all their money getting customers, and there were mismatches. You send this person money, the other person gets it. Yeah? So to me, the core, which is extremely critical, we're going with a proven one. Everything else we are changing. We don't use any of the processes the bank has. Yeah? We don't use the middleware the bank has. We do it sometimes. We're looking at different elements. We definitely have a new front end. So it's not putting lipstick on something that's not so pretty. Yeah, it's just choosing to use elements of it that are proven, and you don't want to make a mistake of not having a proven technology there and then changing everything else. And I think Bank clearly is doing the exact same thing, yeah, trying to use a proven core, and then they're going to change stuff in the middle and the front. Yeah, so I think it's a very similar thing. We don't use the bank's process; we redefine our processes. Yeah, so you get to see it's slightly different. Yep.
So the question is, one of the challenges is customer onboarding. How are you dealing with customer onboarding? There is another bank that claimed to be the first digital bank in the Middle East, but if you go through their onboarding process, they came back with a piece of paper and they ask you to refill all of the information that you provided. It's how are you dealing with your customer onboarding? How, because that is your first interaction with the customer. And I would like just to know to which extent you are taking to the next leap, so it's enabled.
And I think just
And wait a second, I want to add to that, right? So he's asking you, how are you dealing with your customer onboarding, right? Basically, you've got a cost in your branch network that for each customer, but you at least have branches, right? So today with the regulations, so I'm going to ask the question to all of you: how are you guys going to onboard customers? You don't have any branches, and you have a cost. So we'll go with all three of you, but I want to know, how are you handling that cost, and I want to know what you guys are doing.
Okay. Yeah. You're already doing it. So.
Yes, we're doing it. So we work with corporate clients and their employees, who are our consumers, our users. We're very lucky that corporates in the region, to get their staff a visa, have had to take a lot of KYC information, passport scans, Emirates IDs, address, all that good stuff. So we're able to collect all that from the employer, and then we just do an onboarding day with the staff. So for us, we're able to sort of preload it for them, have it ready for them on the day.
Okay.
For us, digitally is the answer. So between your Emirates ID card and your passport from probably over 50% of the countries in the world, as long as we can get a digital version of that, photo of that, we can pull the data from that and do the processing required. There are some legal challenges right now in the market, given we won't be issuing accounts in the next few months before that law hopefully changes. It'll be ready before we launch, and we have a plan B for a light touch addition to that if needed.
So for us, it's purely digital. You take a picture, we are integrated with Emirates ID, we validate biometrics, we make sure it's you, we get all your information from government sources, and you on board. Download the app, take a few pictures, fill up a few things, and you're on. Yeah. So no paper.
So does that mean you're also not launching in the next 3 or 4 months because that's not legal yet?
Maybe we know something you don't. Maybe we know something you don't.
I think that's an interesting point. So one of the things that we'd see in Europe and the rest of the world is banks using the technology that James was just talking to have got onboarding down to being a 10-second, 15-second process. The regulator here right now is stopping that from happening. So there's a regulatory change that I know you guys in CBD have been working with the regulator to sort of push through. As a group of people, and as a group of people trying to digitise and do things differently and take risks in a different way, how do you actually come together to influence the regulator and create that regulatory change?
So I think there's a body, the UBF, that does a lot of lobbying for the banks. Yeah, maybe it should probably include some of the FinTechs and the startups now as we grow in this space. They've been influencing, trying to get better digital, more secure ways of authenticating. But right now it's the primary channel. The other way is we have tons of different options that we've been presenting to different stakeholders, for whom identity of the customer is critical, and just working on that and trying to influence them to drive this change. That's the process right now.
Do you guys have a...
Actually, so to make up for what I just said, I'm actually really pleased with how the likes of CBD and EMBD have been dealing with the regulators on this, because it is purely in the customer's interest to sort this, and that regulatory challenge that's been put there to try and get these things fixed, it is going to deliver a step change for the customer. I think there is a need to come together more on that, to work out what the priorities are, because no regulator, no company can focus on everything at once. So it's how do we work out a better shared agenda on some of the key topics to solve.
I think one of the big steps is now Emirates ID is recognized as an official identity document. I think it's a great first step. I think as we digitize more, it's just everyone has to come together and prove that the new digital ways are actually better than the traditional ways of authentication. There's less room for error in them. I think it'll take time. It'll take time.
And just to add to that, a couple of years ago when we were trying to start Now Money, many people told us, you are crazy, trying to start essentially a virtual bank. Just go back to working in a bank, that's much easier. don't worry, low-income people can't read. And so, like 2 years later, FinTech is getting trendy, and our lives are probably getting a little bit easier. So, you know, it catching on and it becoming a bit of a thing
Collective
means that
change.
everybody has to recognize it, and that collective change is happening.
And to that extent, Kat, so you started 2 years ago, you were told you were crazy, you've kind of been a bit of a forerunner for some of that. To what extent do we need forerunners challenging the regulator versus to what extent should we be expecting the regulator to set the tone?
I think it's an opportunity for collaboration. You can't expect there to be regulation there before you're doing something. Like, the regulator is not a mind reader. They cannot write things before people want to do them. So it's about collaboration. It's about regulators, including the central bank, saying, okay, so we want to do new things. I think it's very much a Dubai and UAE agenda to get everybody digital, get everybody included and online. I think everybody is striving for the same thing. So yeah, it's just a question of the legislation being written around new things together.
Got a question.
Hi, I'm Angeline from ADCB. We have established that we are about 50 odd banks, which we are already overbanked, and we are having 3 new digital banks coming in. How do you see the competition that is coming from the likes of Carrefour, Amazon, and the Ubers? How are we prepared for it, and how are you all prepared for it?
I guess as one of them and as one that's got to compete with them more directly, it's back to my point from before. I think we're overbanked, but I still think we're underserved. And the question is still going to be, what problems are each of them going to solve? I'm sure Amazon is going to solve some particularly thorny or not so thorny challenges around paying for their goods and services easier. That's great. Probably still doesn't help me move money back to another country unless it's returning their goods to another country. So I think it's a good thing actually in that some of the companies doing that are such large entities with such large budgets and large teams that they can also focus on some of the regulatory challenges. They can also drive some of those agendas. And actually, if it ties together more of some of the ecosystems to make greater use of digital financially, not just digital banking, then actually it helps in solving this problem.
Let's also not forget that most of those businesses are international and they've had to buy their way in here. They don't know the region. It usually takes some local expertise for that to actually work.
You know, my view is competition makes it better. Yeah, I think the more competitors you have, the faster you can drive the change. Yeah, so look, banking is an expensive business. Yeah, they digress from what they do well, but they're big companies. They can definitely do it. I think this is a very unique region. Yeah, I think customer behavior here is very unique. So to me, competition just makes it better. Yeah, we can move faster. Sorry.
Everybody's
As I
got a
walk
tendency
over-
of letting the mics go into their chins. If you just raise them up a little bit.
Yeah.
Okay.
As I walk over, I'll ask another question. So you're all friends today. How long is it going to be?
I think we were before this session.
How long is it going to be before you're? How long? What do you say the time frame is before you become enemies? How long?
Why? What's going to happen after
Yeah.
this? Like, what's up your sleeve for after the panel? Like
There's some kind of agenda.
I
we
mean,
want to
is it the
talk about.
Hunger Games?
Yeah, absolutely.
The FinTech Hunger Games.
Have you seen the bank consolidation today? It is Hunger Games. How long? How many years? See?
Look, I'm going to say, I think it's great for startups and firms with different ideas to collaborate, even if you're competing. Yeah, there's a lot of stuff to change. Fighting each other is not going to help that change. Yeah, I think working together to drive the change is probably more important. Yeah, so to me, changing some of the things that need to be changed are more important than competing. Yeah, I think we all need to move the bar further, and competition, I truly believe, is going to help us do it faster. Yeah, so friends. For right now.
I think it's the point that James made earlier on that actually for everybody to be successful here, they need to see some early successes from somebody. And actually, it's in everybody's best interest right now for some positive things to happen. Yeah. So I think that degree of support and collaboration will continue at least for a little while. Right?
Yeah, hopefully.
I think it's also a really small market, and we'll all end up working together one way or another at some point in the future, right? And I remember a time when I was at Tandem, we did our crowdfund. We did it slightly after Mondo had done, had done theirs. And they sent us a cake congratulating us on how well the crowdfund went. And yes, there was rivalry, and yes, there was joshing at times on that stuff, but it is far more important that the whole sector succeeds. And there will be business rivalry, but business rivalry is different than personal rivalry.
And I actually think that carries through. So I think if you look at a lot of the UK challenges, if you go and follow them all on Twitter, when one of them has a public milestone, what you'll see is they'll all congratulate each other. So Mondo having their restrictions lifted, will have had a whole load of feedback from the others just saying that's brilliant because it helps us all on the journey. Right now, everybody's competing against a system that's a little bit broken as opposed to competing against each other.
Yeah.
We've got microphones.
Yeah,
Sorry.
I have the mic. Katja Vandel, I'm coming from Slovenia. I would like to ask you, since we are discussing next money, future money, millennials, and so on, what about cryptocurrencies? I don't know if it's allowed to ask it here or not. Is this your enemy? I'm asking because I'm helping a team of Slovenian guys who developed a cryptocurrency backed by gold. They have been here for the annual investment meeting, and it was quite a lot of interest about it. So are cryptocurrencies in your focus or are your enemy?
Kat, do you want to go there first? I imagine it's something that is on your radar for sure.
Yeah, absolutely. So we are actually using a Bitcoin provider as one of our remittance options. That gives us not only access, obviously, to the Bitcoin economy, but if a bank decides to stop sending volatile currency like Indian rupee, and some of the remittance houses are backed up by banks here, it means that we have an alternative way to get rupee into the country because we can buy Bitcoin onshore in the UAE, send that to India, and trade it back out into rupee there. So we use a Bitcoin provider, and they're absolutely fantastic, and the rates are very cheap.
From our side, no, from a Bitcoin and cryptocurrency perspective, there aren't the right customer propositions for that unless we were to add it on to some of the wealth management there for what you're investing in. But in terms of some of the underlying technologies, so distributed ledger technology, actually the more we bring together more FinTech providers and try and almost become an ecosystem for them, the more we need to have a federated model of who the customer is, what the customer's data is, and to have some consolidation around that where some of those technologies really help.
Yeah, I mean, similarly, for us right now, in our priority list, it's probably not high up there. But I think in the future we'd look at it. We have a core set of things we want to accomplish first, and then we'll look at some other stuff.
Fantastic. I think, we've got a question over here.
Thanks, guys. Hi, Femi. I look over marketing for CBD Now, and I'll tell you now, we'll always be friends.
Come and join the panel. Whoa.
I'll tell you now, we'll always be friends no matter what, because we're against the a sort of ecosystem together, so we got to stick together. My question is really, I mean, we tackled a lot of issues here. We talked about trust on the security front. We talked about data. We talked about several sort of obstacles. I think the thing that I'd like to get from your end is more on the sort of the human interaction that's been there for generations in this industry. How do you bridge that trust from your perspective? And I think it's such a core element of changing this game that we're all in, right? So I want to, and I know everybody has a different model and different segments, but how do you bridge that, right? Specifically with local audiences.
Jayesh, do you want to take that one?
Yeah, I think it's a challenge. Yeah, it's not easy. If you look at the data of customers who going into branches, we have all digital options, but customers still love going to the branches. Believe it or not, yeah. It's going to take time. I think the best shot, at least my personal view, is go after the younger audience. Yeah, and remember the existing banks. Yeah, ADCB, Emirates NBD, all these banks have awesome digital apps too. Yeah, getting the personal touch. People love calling people and say, "Hey, what's my balance?" You could have just pressed a few buttons and found out. Yeah, but it's consumer behavior. I think changing it is going to be a challenge, and maybe it's something where all the fintechs and the startups work together to try to educate the customer, yeah, that you're better off. To us, Obviously, people, it's a migrant community. People who come from specific markets are more likely to adopt. And second thing is younger generation, is more likely because they haven't built that relationship yet.
And Jayesh, with Live, to what extent are you going to allow that proposition to actually interface into your existing branch infrastructure, or to what extent are you actually going to try and make it clean?
We're going to try to make it clean. I think, one of the biggest challenges is, I'm sure the other folks can talk about it, is the ecosystem has to work. You can't do stuff in isolation. So for example, we don't want to do checkbooks. But a guy comes to you and says, hey, I got to pay rent. What are you going to do? So I think there's some ecosystem change that's required also. So we want to, as much as possible, limit our branch usage. In fact, we design our app and our services so you never actually go to the branch. But there are some instances that customers will have to go to it, and then we'll manage how we do it. We'll manage it. But I think this is something that's going to take a little bit of time.
And James, from your perspective, so you don't have the luxury of a branch network to fall back down on. How are you actually going to deal with those moments for a customer that really matter? And I think the examples that you say, it's something like a check, it's a really difficult financial acquisition or difficult financial circumstances or dealing with a death. How are you actually going to manage with those rather than just the people who want to deal with a balance inquiry, for example?
Sure. So I think there's three pieces to that. I think one is how do we first get the right kind of customer who doesn't want that physical experience as their primary one. So actually, how do we build the right advocacy model to get the first few customers on board who buy into that, who can prove that works for them, and then bring in more. And that's one of the reasons why our growth numbers are targeted that way, is so that it gives us time to build that. Then I think there are scenarios which right now do require a physical point of presence. I think the first thing is try and minimize all of those. So checks are a great example. If we've got to go around taking checkbooks out, that's still feeling a little bit 17th century. There are ways we can do checks without necessarily doing checkbooks. And so it's how can we do as many of those as possible to reduce those remaining scenarios. And then when it comes down to remaining scenarios, it's for me not just how much of it is about. It's about human interaction more than it's necessarily about physical point of presence human interaction. So the question becomes, is the right person there and able to communicate with me and contextualize at the right time? Not necessarily, do I have to drive to the other end of the city in rush hour to go to a branch to deal with this? I think that's a different problem.
Kat, do you have? I'm guessing from what you're saying that a lot of your customers struggled to get to the physical presence anyway. So for those guys, having services that are outside of that is a big win. But are you finding a similar challenge in terms of adoption, engagement?
So one of the assumptions that people often place on low-income people, and one of the ones that we heard a lot in the early days, are low-income people like standing in queues. It's the highlight of their week, sending money home. To which we were like, I think they might prefer to have a coffee with their friends at that time. So actually, the people that we're dealing with, we find often come from countries where mobile money is way more advanced than it is here. So Pakistan has had instant payments for 15 years. Like in India, Paytm, which is their mobile money app, has got I think millions and millions of users now and was their top funded business last year. Like when India said they were going to go cashless, they were opening something like 9 million accounts a month or something. So we're talking about a population who are already much more familiar with mobile money than we are, unfortunately. So when we talk to particularly Pakistanis and say, this is the app, what do you think about it? They're like, this is like Easy Payza, which we've had in Pakistan forever. Why don't we have this here?
Give us something more exciting.
So, I think there's a lot to be said for a population that are already familiar with these things. It's the UAE that unfortunately is a little bit behind in terms of mobile money, so we're just catching up.
Fantastic. Do we have one more question?
I'm going to have to cut it.
Time?
Sorry,
Okay.
I apologize. But what I'm definitely going to do before I thank our wonderful panelists is I'm going to defend Bangladesh, the honor of Bangladesh. And I helped a company there start a challenger mobile money business that has 30 million customers on those $10 routers. So my question is, 1 year from now, I put them on the spot last week, 1 year from now, how many customers will you have?
Hopefully about 50,000.
Hopefully slightly more.
Give me a number.
Depends on at what point you're
Give me a number. 1 year from now, 365 and a quarter days, how many customers?
a 5-digit number. That's all you're getting.
50,001.
Yep.
I'll say enough.
Come on! How many?
I was tricked.
The price is right, 50,002.
We'll make it 50,002. How about that?
50,002, there we go. That's what I want to see there. So I just want to say, by the way, the interaction, the questions, very sorry, sir, we couldn't get to your question. It's almost 8 o'clock. And I just want to say, this is the reason why we get this group together, because the types of questions that people are asking are not the basic, what's a challenger bank? It's really about how to go into the market and execute a challenger bank. And I really appreciate all the panelists, and Sarah as well, for being here. So please, a big round of applause for all the panelists. And before we go, I just want to remind everyone to check out the website, nextmoneydxb.com. We're going to be participating in a few different, May, by the way, is the month of FinTech. There's about 75 FinTech events going on. Obviously, the most important one is the one where we're the knowledge partner with ArabNet. Plug, plug, plug. And in fact, I think it's going to be really fun. We've got some really great people that are going to come and speak with that. And Barbara Biro's here somewhere, who's going to do something about blockchain and bank APIs, which I think is going to be pretty amazing. So that's going to be an event that we're going to be at. We're going to do a number of things before we hit Ramadan, before we hit the summer. So really, thanks everyone for coming out, making this community, asking the questions. And please feel free to meet everyone, network within each other. And then I think we're going to go to Hokkaido. Is that the name of it? Hakistan. Exactly. Like I said, we're not going skiing. We're going to Hakistan, which is much closer, just down there. So hope to see everyone there. So thanks again for coming. And one more round of applause for our panelists.